Good day to all the interested parties in this short recording. We will be dealing with the question regarding bank reconciliations, so feel free to follow if you have the content, but we will also have printouts of the content during this video recording. Like with any other accounting question, the first thing that we do after taking a positive attitude towards finishing this question successfully is we read the required part. In the A part of the required, they ask us to show a combined adjustment journal entry required on the 30th of April to record the information above. Combined adjustment journal entry is different from a normal journal entry, but I will show you that when we talk about the format. In the B part of the required, they ask us to show the bank account for April 20.3 in the general ledger of Aristocraft shops, properly balanced. So the A and the B part of this required is from the point of view of the entity. In the C part, they ask us to prepare the bank reconciliation statement of Aristocraft shops at the 30th of April 20.3. So this is from the bank's perspective. So A and B from the entity, and then we have a different perspective here. This is from the bank's perspective. That's why they tell us to start with the balance as per bank statement. Let's have a look at the format of these three required items. The general journal of Aristocraft shops, like a normal general journal, we have a column for the debits and the credits. And then they mentioned that we have to do a combined adjustment journal entry. So a combined adjustment journal entry implies that we can influence the bank account, because that's the reason why we do this general journal entry, to adjust the bank. We can have an entry in bank only once in this general journal. So you are combining debits and credits in other accounts with one entry only in the bank account. The T account, which will be influenced by the journal entry that we just had. And then the bank reconciliation statement, this is from the bank's point of view, remember. So if you think about your bank account, in your books, it will be an asset. Now walk out and walk into the bank. From the bank's perspective, if you have money with them, you will be classified as a liability for the bank. Remember, if you walk in and ask for your money, they will have to give it back to you, so they are liable to give you that money back. And the rule for a liability, positive on the credit side, negative on the debit side. So this is different from your entity's point of view for the bank account. So we always start this report, because it's a bank reconciliation statement, so it's a report that we're writing to the bank. We start with this, with the balance as per the statement of the bank. So we are telling them, according to your records, your system of keeping record of our cash transactions, you say that we had either a positive or a negative balance. And during our reconciliation process, we picked up a number of differences, which we're going to list here, so that in the end, we can reconcile your records with our records. Remember, reconciliation is a process of two systems keeping track of the same information, but they are separate from each other. So we're trying to get them to be the same, reconciling them. Now we're ready with the format, and we can start with the question. In the given information, they tell us that the following information refers to Aristocraft shops. We have a bank reconciliation statement of Aristocraft shops at 31st of March 20.3. So this is the previous month's bank reconciliation. Why would we want this information? On the report to the bank at the end of last month, we warned them about certain outstanding transactions. If they have not yet fixed these outstanding transactions or mistakes that they've made, these items will have to appear in the current bank reconciliation until the problem is resolved. we also need this bank reconciliation statement information because the balance of the bank account at the end of March will also be the balance of the bank account at the start of April. So I can use that information in my bank account as the 1st of April balance brought down of 1,980. As we now read the additional information, I want you to think about where to fix this problem. Remember, we have two separate systems, and I can either add this mistake or omission in my records, or I need to add it in the letter that I'm writing to the bank, the report that I'm writing to the bank. So those are your options, your records or the bank's records. They tell me that a comparison of the cash journals for April and the bank reconciliation statement for March, remember I want to see whether they actually fixed the mistakes that they were supposed to, with the bank statement for April showed the following. I have cash receipts adding up to 16,601 and cash payments adding up to 15,022 according to the cash reports at month end. Cash reports is in our records, so I can only influence my records, and that will be entered in my bank account as total receipts on the debit side and total payments on the credit side. Bank overdraft on the 30th of April as per the bank statement, 8,131. Bank statement is the bank's point of view. So I can't fix this in my records. I will have to start with this in my report from the bank's point of view. So I go to my bank reconciliation statement and I started this report off with balance as per bank statement. Now they tell me that this is a bank overdraft. Remember the rules in bank reconciliation. I've got a positive and a negative according to the basic accounting equation. So bank overdraft is not a positive balance but a negative balance. So I will have to start with this amount in the debit column of the bank reconciliation statement. Number 3, a deposit of 4,700 appears on the bank statement of April. So we want to fix this mistake in our books. So we want to go to the general journal. Just before you enter this in the general journal, make sure that this was not a mistake that we transferred from last month onto the report. In the bank reconciliation statement for March, they warned about an outstanding deposit of 4,700. Remember, it had to be in my books in March to end up as outstanding in the bank reconciliation. So I can just tick it off because now both systems contain the same information. A debit order of 800 Rand for the installment on a loan from Adva Bank appears on the bank statement. The repayment consists of 300 Rand interest and 500 Rand repayment of the loan. So this appears on the bank statement, so the bank knows about it, we don't. Where do we fix the mistake? In our general journal. So repayment of a loan will decrease the liability, decreasing the liability on the debit side, and we debit the interest expense and credit bank. Just because we have a bank overdraft, I want to keep this interest expense in a bracket because there might be other interest that I need to add as well. Also note that I do not account for the credits in bank because remember it's a combined adjustment journal entry. So I will first have all my transactions and then have bank as the balancing amount. The bank statement showed the following debits. We've got service fees of 53 Rand and we've got interest on the overdraft of 136. So the bank knows about it, we don't. Where do we fix? We go to the general journal again. So bank charges of 53 Rand on the debit side, and then the 136 interest expense, I just added that to my other interest expense. Students often want to combine bank charges and interest expenses from the bank statement. One reason why you can't do that, there is VAT on bank charges, but there is no VAT on the interest expense. That's just one of the reasons. You can think of more. The bank has not yet recorded the deposit of 7553 on the 30th of April 20.3. So if the bank has not yet recorded it, we know about it, but the bank does not. I fix bank errors or omissions in the bank reconciliation statement. So now I've got an outstanding deposit. Outstanding deposit, if you think about the bank's point of view, an outstanding deposit will make the bank owe us more. So that 7553 will have to be added on the credit side. The owner deposited 600 Rand into his personal bank account. The bank incorrectly recorded the deposit on the bank account of the entity. So my decision tree, who made the mistake? The bank incorrectly recorded the deposit, so I will have to fix it in the report to the bank. So I go to my bank reconciliation statement, and this was a deposit. So the bank erroneously put this deposit in on the credit side, so they added it on the credit side. What do I do with the credit to get rid of it? I will have to debit, and you just tell them this is the correction of an error. Debtor Gus de Tooy deposited 150 Rand directly into the bank account of the entity in settlement of his account. So if it was directly deposited into the bank account, the bank knows about it and we don't. Where do we fix? In the general journal. So if the debtor deposited, the debtor will owe me less. So I'm going to credit the asset, credit debtors control, and the name of the debtor. This is for the general ledger, and this one is for the debtors ledger. If we now want to complete the reconciliation process, we've gone through all the identified mistakes and omissions. First thing that you have to do is make sure from last month's bank reconciliation that you've actually addressed all the items, and we ticked off the deposit. We've included this balance, and the balance as per bank statement is not important for our bank reconciliation in April. We go to our general journal. We had our list of debits, the repayment of the loan, the bank charges, and the interest. And we had one credit over here where the debtor made the direct deposit. So all these debits minus this credit, if I add up all of these minus this credit, I will have a net credit effect in bank of 839. This is my bank statement items that I now take into account in my records to enable me to reconcile. Why did I do this journal in the first place? Remember, from a source document, I go to the journal, going through to the general ledger. So I want to use this 839 in my bank account as my bank statement adjustments. So now from the opening balance plus the total payments plus the sundry accounts gives me a credit total of 17,779. So 17,779 minus my total receipts will give me my new balance for the bank account. This new balance as per bank account needs to be reconciled with the bank statement balance. In the bank reconciliation statement, we started off with their balance as per bank statement. This balance adjusted for outstanding deposit, adjusted for the 600 correction of error, will give me on the debit side up to this point, I will have a debit balance in the bank statement of 1178, and that debit balance of 1178 will mirror the balance as per bank account, because remember, bank reconciliation is from the bank's point of view. So a debit from the bank's point of view will be equal to a credit from our point of view. So you can put this total in and just balance it with the 1178, or if you just add up the debit column, that must be equal to the sum of the credits. Thank you for joining me for this short video. I hope to see you soon.